Trump threatens tariffs, and the stock market and countries react. Let's talk about it. Hello, everybody. Joe Rorbert coming at you. The last few days, the news has had nothing to talk about but these new tariffs that Trump is saying are going to go into place tomorrow. He is going to place tariffs on all Chinese imports at 10%, and he originally was going to place 25% tariffs on all Mexican and Canadian imports, but he's backed off on that a little bit, saying he's only going to do 10% on oil and natural gas, which you have to remember that currently Canada represents about 21% of all of our imports, so that could raise gas accordingly, and we saw that happen in the stock market today. However, we have seen some turnaround from some of the presidents. Mexico has declared that they will move 10,000 troops to the border, and Trump in response has said he will put the tariffs off for a month. So what is Trump hoping to gain from this? Number one, he wants safer borders. He wants safer borders both from immigrants and from drugs. And while he doesn't say or come out and say that Canada is as big of a culprit as Mexico is with this, we are seeing fentanyl coming in from Mexico, we're seeing it come in from Canada, and we're seeing it come in from China. So his stance on the tariffs is that he wants Americans to be safer, so he wants to charge them more money until such time as they crack down on immigration and drug importation. Does that mean that these tariffs will actually go into place? I don't know, because it looks like Mexico has already backed off and we saw a month delay. We'll have to see what happens with China. We'll have to see what happens with Mexico. Of course, both of these countries have reacted by saying they're going to raise tariffs, that they're going to sue us in court. But at the end of the day, what we saw the stock markets begin to plummet the opening of business today. But as soon as Mexico said that they were going to send the troops and Trump said he was going to back off on these tariffs for a month, we saw the markets all head towards hopefully a positive day. But let's focus on the bigger picture. Year to date, the Dow Jones is still up 5%. The S&P and the NASDAQ are both up over 2 or close to 2%. But if we look at a rolling 12-month return, the S&P and the NASDAQ are up over 20%. The Dow Jones is still up over 16%. So you can't get bogged down in the day-to-day news articles because it's going to freak you out. It's going to worry you. You're going to make decisions that you shouldn't make. You have to take a step back and look at the broad picture. The economy is still strong. People are still spending money. And yes, Trump has come out and admitted that these tariffs, should they go into place, will end up costing Americans more money in the short term. His hope, I believe, is that in the long term we'll be safer and eventually these costs will come down. Because tariffs, of course, aren't directly paid by the consumer. They're paid by the company that imports the goods. But we do know that some of those costs will be passed on to the consumer. So Trump's hoping that these borders will be protected. I believe he's hoping that some of these manufacturers will bring some of that business to the U.S. Whether that's going to happen, we don't know. But here's what we have to deal with. Trump is president. He's making these claims. He's saying he's going to raise these tariffs. So these countries have to respond in some fashion, or we, the consumer, will be paying the price for a short term or a longer term. But at the end of the day, people are still going to be spending money. We're still going to see the stock market, hopefully, in the short term, it's back a little bit, hopefully continue to grow. Right now, there's nearly $6.9 trillion sitting in money market accounts. This is the largest amount of money sitting on the sideline. Look, before COVID, we had about $3 trillion. So this is 144% more money sitting in money market accounts than pre-COVID. That money eventually has to go somewhere. If you look at it, the reason it's sitting there is because inflation is below 3% and money market accounts are still paying 4.5% to 5%. So why wouldn't you have your lazy dollars sitting there getting 4.5% to 5%, getting more than inflation? However, these tariffs, should they go into place, could cause an increase in inflation. That increase in inflation could cause Powell, who just made the announcement that he wasn't going to lower interest rates in January, and maybe not at his next meeting, could cause Powell to lower interest rates more rapidly in the future, because at the end of the day, that's what businesses want. Businesses want lower cost loans. Businesses run on capital. When capital is free at 2 to 3%, or when capital is cheaper at 4 to 5%, businesses can expand easier. These higher fixed rates are good for retirees who like to have money sitting in fixed income investments. They aren't as good for businesses who need capital to expand. So it's this fight, it's this give and take. Which is better for which part of the economy? Higher interest rates, good for retirees. Higher interest rates, not great for businesses. So who is Trump going to support? More than likely, he's going to be supporting the people who put him into play, which are the businesses. He's going to try to get business taxes lowered. Yes, he's going to try to get the ordinary Americans' taxes lowered, but it looks like he's going to be trying to help businesses, which he's hoping in turn, I hate using this term, Reagan used it, trickle-down economics. He's hoping that will trickle down to the everyday person. That remains to be seen, but it's going to be very important that you not overreact in these times. You know, when we see these markets pull back really quickly, what has happened over the last 2 to 3 years has those quick pullbacks have been quick recoveries. And if you would have made the mistake of selling out in that downturn, you would not have been able to recover. So take a deep breath, like I always say. Look at the bigger picture. Remember that America is made up of 300 plus a million Americans, 230 plus million adults who are going to be spending more and more money year in and year out. Corporate profits rely on them spending money. I don't see that changing. Yes, with inflation, it's going to cost them more, but at the end of the day, that might mean more profits for businesses, which could mean more returns on the stock market, which, while the average American doesn't like to pay more money, they like getting more money in the stock market. They like seeing their retirement accounts grow. So again, it's that give and take in this economy. So try not to overreact. Things could be looking up. We'll see what happens with Mexico and China. Check back with me to see what goes on if these tariffs go into place and what it means for your dollars. If you like videos like this, make sure you check back every single week. Leave a comment down below, hit that subscribe button, and as always, I'll see you next time.